The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss the crypto markets is Bilal Little. He's president at DFD Partners. Welcome, Bilal.
Thank you for having me. Appreciate it.
Glad to see you. So, as we discussed at the start, a 75 basis points increase in the Fed funds rate in the U.S., 75 basis points in the U.K. It's the biggest hike in 33 years, a third of a century. It looks like the markets are, or at least it looks like the central banks are trying to tame inflation as best as they could, and in doing so, they might throw cold water on these hot economies, and that might spell trouble for Bitcoin and other crypto, correct?
Actually, I don't think so. I think, look, the markets want clarity, and what was happening is we're trying to figure out, are we going to stay the course and or are we going to make a pivot, right? And the fact of the matter is, Fed Chairman Powell basically remained hawkish. And I think the way to think about this is he basically said, look, we're not going to make a premature move and cool off rates at this particular point in time. I think the Fed understands that the consequence of today is a reflection of them basically easy money over the last 2 years. And the fact of the matter is they're playing catch up. So right now, what you see as far as the movement in prices, actually, I think the market actually priced in where we are. I think everyone's turned their attention to CPI numbers actually next week.
Yeah, we might get those CPI numbers, but what if they continue to be as hot as they have been over the past few months? Does it mean that basically, with this sort of aggressive moves by the central banks, though? What do you think the appetite for risk will be in the overall market? I mean, you talk about this decoupling and what have you, but I'd say this. Look, you clearly got pressure on equities, right, in this particular sense, but you also have significant pressure on fixed income. And I think what you'll see investors looking to assets for better returns and a safe haven. In this case, it's going to be Bitcoin. Right now, you see from a support level, 18,000 or so on Bitcoin. And I think the market is looking for a nice surprise to the upside. Once we break 22,000, we'd likely go to 25 or 26,000. And that's just going to be a good sign for not only the crypto markets, but you continue to see institutional adoption at this period and where we're sort of trading sideways.
So we saw with the price reaction of Bitcoin yesterday, it, spiked a bit after the Fed announcement. Mm-hmm. ETH and Dogecoin have gone down. Bitcoin has gone down moderately since. So I was wondering if you could weigh in on the reaction of the crypto markets, where they're headed in the future, and does the Fed really have any impact on the crypto markets, or have they decoupled from the greater macro landscape?
I don't think it's enough evidence to show that it's a clear decoupling at this particular point. I think that's an argument that people are paying attention to. There has been a lot less volatility within the crypto markets as we've I wouldn't call it bottomed out, but we sit at a very comfortable level for traders. You continue to see buyers in the $18,000, $19,000, and $20,000 range. And the pop or spike that you saw yesterday, I think, was a quick knee-jerk reaction, but you clearly saw a retracement in both equities and crypto.
Just to turn to a slightly lighter subject for a moment, what do you think about this recent Doge rally? Do you think that this can last, or do you think this is just, everyone's talking about it, but Doge has outperformed, Bitcoin and a lot of other cryptocurrencies. So do you think this has legs, so to speak?
That's an interesting question. What I would say is it's definitely on the back of Elon Musk and what he's doing over at Twitter. Clearly, a lot of disruption taking place over there, but I think the more interesting part was when he took over Twitter, not only did he kind of change the guard at the top, but he also launched SpaceX on the same evening, just 15 minutes later, right? But what you see is a clear support in the Doge rally, because they're all excited to think about what exciting elements could Elon bring as he supports Doge on the Twitter platform.
Bilal, in your notes to us, you brought up the idea that the crypto landscape is changing, that there's more innovation in this time of doldrums, and you cite the likes of
JP Morgan and BlackRock getting involved in crypto. But what's interesting to note, at least from some of my sources, they're saying, look, they're partnering. A lot of these companies are partnering with the likes of Coinbase because it allows them to have a tone to crypto without actually having to invest too much into it. That if they were really serious, they would either build it out on their own or acquire, let's say, a smaller player and have it use their infrastructure to build out their crypto interests. What do you say to that argument that this isn't that this is more of a putting a couple of chips on red instead of betting everything on 00?
Yeah, look, I think it's actually much more interesting than that. Just so you know, like I spent 6.5 years at BlackRock, so I understand the machine very, very well. What I think is actually happening is you actually see broad adoption. And when you have the adoption taking place amongst our financial institutions, our most trusted financial institutions, let's be very clear, we're talking about JP Morgan, America's Bank, and we're talking about the largest investment company in BlackRock. You see large adoption, which I think that's a sign that not only do they want to embrace crypto, but I think they're also trying to figure out ways how their business can thrive with this new asset class. So they're all figuring out different ways to not only monetize this, but to have strategic partnerships with the key players, whether it's FTX and or Coinbase, to help grow their businesses in the future, but also have better alignment with the future of the asset class.